Welcome to the Multifamily Investor Nation podcast, sponsored by CoStar. With us today is Josh Stack and Thomas Konditi. Welcome, gentlemen, to the podcast.
Thanks a lot.
Good afternoon.
Well, this is going to be an interesting episode. So for those of you who have been following us and listening to our podcast for at least probably a year or so, you would have already watched an episode, not watched, but listened to an episode with Joshua and Thomas on one of their properties. It was a 10-unit property out of Mount Holly, North Carolina, called Humboldt Place. And I would encourage you to go back and listen to that episode. I pulled it up, and that episode was released in April of 2019. The exact date was April 19th, I believe. April 19th, 2019. We'll try to include those inside of the show notes. So for those of you who have maybe not listened to that one, I would encourage you to stop right now and go listen to that podcast first. And this is going to be part two. So this is part two of that kind of, after they acquired the property and after they did some of the renovations and they kind of leased it up. So we're going to be talking about some of the different, challenges that were had on this particular acquisition and even after acquisition and trying to get it renovated. So before we get started, for those that don't know who you all are, why don't we get you started? And Josh, you can kind of get us started first, and then Thomas, you can take over as well and share a little bit about your background and then also talk about where you are right now in the multifamily space.
Sure. Thanks, Dan. My name is Josh Stack. I'm a full-time real estate investor and one half of Humboldt Partners. Thomas will introduce himself. He's the other half, probably the bigger half. I have a long background working with a Danish conglomerate, Maersk. I spent more than 10 years overseas and have been back in the United States now for about a year, moved my family back. For the last year, we've traveled a lot of the United States. We did a 20,000-mile road trip over 6 months, and that was a lot of fun. So we had a big year in 2019, not only traveling, but the acquisitions side and the rehab side that Thomas will be talking about. So that's a little bit about me.
All righty. And I'm Thomas Konditi. I am the other half and maybe the better looking half of the partnership. I spent about 25 years with General Electric in various roles of finance and running businesses, both inside and outside the U.S. And then I've been in real estate for probably over 15 years in one form or the other. But when I was retired, or when I was ready to retire from the corporate life, it was natural for me to move over to real estate. And so I started managing our family portfolio and doing that and acquiring for that. I met Josh and we figured we're heading in the same direction with the same objectives and a lot of the same values from our past lives. Two is better than one when you're going down the road here. So we partnered up. As Josh said, we were very busy in 2019. You're going to hear about this property, but we did go on to buy another 70 plus doors to add to the portfolio. So as exciting as this property was, there's even more coming down the path.
Well, from what I remember before in our last episode on the Humboldt Place property, this again is the 10-unit property out of Mount Holly, North Carolina. There were starting to be some issues, and we kind of held off on talking about too many of them at the end of that episode because we were really talking about how you acquired that property. And then towards the end, I remember us talking about some of the issues, and I'm glad you reached back out so we can talk about some of those issues a little bit further. And because a lot of times, in the green room, we were talking about how a lot of times you listen to some podcast and you just hear about how many units they acquired and how much money they're making now. And you don't really hear about, the middle of that story about what things maybe didn't go as planned. And so I don't know which one of you want to get started, but let's kind of get started and talk about, after closing, what was the process that you guys took to, I guess, begin the renovation process, because that was kind of the plan in the beginning. So maybe talk first about what was the plan for renovations. Then we can kind of dive into some of the issues you guys started to experience.
Right. I'll start off there. So we acquired the property from an owner through a direct mail campaign. We closed the property in November 2018. And throughout the fall of 2018, leading up to the acquisition, we were planning the rehab. And it was going to be essentially a gut rehab without taking out all the sheetrock. And we were debating strongly, do we empty one building that's 5 units? Do we empty both buildings, all 10 units? How are we going to do this? We negotiated, went into deep negotiations with a general contractor, had pricing that we felt really good about, and a project plan that we felt really good about. We emptied out the buildings, both buildings in January, and that was about the time that we started to we recorded the first episode, and we were ready to begin. And then on Friday, before we were going to begin on Monday, everything went sideways, and our GC completely bailed on us. And it turns out that it was a little bit of a facade on their side, and the person that we were talking to lost favor within the company, or maybe left the company suddenly. And then we started talking to the gentlemen who were left at the company, who were then claiming to be the management of the company. And those discussions did not go well over Thursday, Friday. And by Friday, close of business, we did not have a GC to start work on Monday. And Thomas and I were like, well, where do we go from here?
So how did you originally find this GC? Because, obviously when you're in a market and you have a lot of these contacts, it's, you have a track record with some GCs, but obviously, you probably found this person, outside of your general contact. So how did you end up finding this person to begin with?
Well, we ran a request for proposal and put it out to the market. So anybody that was a general contractor in Mount Holly, Belmont, Gastonia, we sent them a request for proposal. We got a few leads. I think we actually found this GC through Thumbtack, the app, and they showed up and they brought a bid team and they did a really good job, and they impressed our broker who was working with us. He said, these guys have worked with REITs. They know exactly what they're doing. They have the capability to come in here and do this conveyor belt style. And I think they'll blow through this for you with no problem. And really all of the discussions were very, very positive, and everything was going in the right direction. I think in hindsight, there were a few red flags that Thomas should probably talk about that we didn't recognize. And had we recognized those earlier on, we would have figured out that maybe we were dealing with a group that wasn't fully communicating internally, or didn't have the capability to do what we were being promised they could do.
Yeah, maybe I'll pick up there. I think the red flags, I hate to say this, but they had a great price. And, you read that everywhere. Hey, if the price is too great, or if it's too good to be true, then beware. I will come back with a fair amount of humility and say, you know what, the price was too good. The quotes we got from probably, I think, 3 others was maybe in the $35,000 per unit range, which we thought was high. And then this one came in, I think, closer to 28,000. And, that's great. So, and which we thought that was where it should come out to. So one thing is the price. And I don't think that when all was said and done that the individual component prices were off. It's just that when you looked at the other stuff that needed to be done, they hadn't done some of their homework. I think a couple other red flags is, as Josh said, we were coming up to construction start on Monday, I think January the 5th or 6th. And December 31st, there were still no permits pulled. And throughout the month of December, we had asked the contractor if he had permits done. And yeah, we're working it, but permits don't take that long. And so permits weren't pulled, a few days before work was supposed to start. I think the other thing is, for a job like this, you really want to know probably 3 or 4 people inside the organization, so that because there's going to be a different person selling the job. There's going to be a different person supervising it on day to day. There's going to be a different person sort of overseeing the operating side of the company. And maybe there's going to be a different president or CEO. I think for our job, we probably could have hit 3 or 4 other people. Now, again, these are hindsight warning signs, because when you talk to the references, they were big references. VPs of major regional companies who supported these guys and what they do. So I think that was, you can get sort of hidden, you can get a little bit of obfuscation or shadow from one side of things that you're looking at, but then you got to pay attention to the warning signs. And we had a few. Of course, we got a huge warning sign when the guy sent us a note saying, hey, I'm leaving the company and here are your new contacts. That was the final warning sign that things were bad.
Well, I can definitely imagine being in your position and getting that kind of an email and realizing we are back at square one at finding a GC. So, obviously having that kind of feeling is kind of puts you behind the 8 ball. So kind of moving down a little bit, what did you do to try to find the next GC and hopefully kind of mitigate that same problem?
Well, we were back at square one, essentially. The other bids that had come in were much, much higher. And we didn't feel like we could go to any of those contractors to get the work done. And one sort of shining light from the poor experience that we had was that our contact at the original GC did give us a lead on somebody he felt like could do the job and do the work. And so we got in contact with that gentleman. He came out, looked at the property along with his project manager, and they gave us a bid, and it came in significantly higher than we were expecting. But at this stage, we have an empty property. We're 3 months into owning it. We haven't collected a dime off of it, essentially. And we're already, weeks behind on our proposed renovation. And of course, the bank starts to get wind of this, and they start to ask questions and wonder exactly what we're doing. So we've got a lot of credibility on the line, as well as just the stress of trying to figure out what to do.
Well, I will add one thing, and maybe this is important for what we did have done. So we were square four, and why was that? Because we had gone through very detailed look at the construction, at the parts, the pieces. So when you were starting with a new contractor, you weren't starting from, hey, what are we going to do here? You were starting from, here's the 16 pages of stuff that we'd like to get done. That did help with moving on to the next person, as Josh mentioned. I think what's also important is what we didn't do. The temptation was sue these guys, right? I mean, I can't believe they left us sitting here, empty building, no tenants. Let's go after them. And I think it was a pretty quick, maybe 24-hour period, especially, with little discussion with our lawyer to say, what's the point? You're not going to put tenants in by suing somebody. And for these kinds of contractors, I mean, even if you get something, it's going to be a dollar late, a dollar short. So we didn't waste a lot of time on suing. We basically just sent a termination letter, said, goodbye and good luck. Didn't mean the last part, but we did mean the first part.
So talking about the timing issues again, if I remember correctly from our first podcast we did together, some of the timing issues, and Josh, you mentioned just a little bit, was from the lender's perspective as well, because you had a certain time frame that the lender had given you to be able to get the renovations done, didn't they?
Right. We closed the loan in November, and then we had 6 months of interest-only period on a 7-year loan. So we started to run out of interest-only in May. But we've got a good relationship with the banker, so in the end, it was all good, no harm, no foul.
Now, from the lender's perspective, were they fronting some of the construction or the renovation costs as well?
One good thing is we never paid the GC a deposit. So we didn't lose any money on the original GC. We only lost time. And we basically had to front the first 20% of the renovation costs, and they would fund the last 80%. So the first money that was going into the project was out of our pockets anyway.
The biggest thing is we've got this empty building. It's already been 2 months and we still don't have a GC. It's got to get that person right away.
Exactly. So when we did enter discussions with the couple other GCs that we went to find our new GC, they really had us in a position where they were dictating terms to us, right? If we wanted to start the project, if we wanted to get going on it, we were going to have to do it on their terms. So in the end, we really had to de-scope our project, and the budget was revised upwards, shall we say, about $50,000.
So where did you make those savings and some of those amenities that you're talking about as far as reducing the scope?
We took out the tile backsplash in the kitchen. We did not replace the tubs in the upstairs bathrooms. Thomas, do you recall? Oh yeah, we instead of LVP throughout, we ended up downscoping to carpet in the upstairs bedrooms. So a few of those things we had to cut back.
I think the carpet was probably a good choice anyway from a noise perspective, because even the LVP that has the cushion backing can sometimes cause complaints from the downstairs residents and stuff too. Or is this all up of a 2-story units?
There's side-by-side townhomes, so
okay.
If there's somebody above you, it's your own apartment.
Okay, so it doesn't really matter too much. I think I remember that because after our podcast, I think it was after the podcast, we actually drove up there and got to kind of walk through the beginning stages of the renovation. So I do remember that.
Yep.
So let's talk about some of the other issues that came up. So I know you guys had some additional kind of surprises that came up even during the renovations. Exactly.
We had the new GC, and we got all of our agreements in place with him. We were happy with what they were doing, and they were getting ready to start. They would come in, and we took on some scope initially. So, for example, we had our property manager arrange that the units were cleaned out. We ended up filling 4 30-yard dumpsters with tenant belongings because our tenants just left. One left a car in the parking lot and a car full of stuff in the parking lot. We had to have that towed. So we ended up with a lot of tenant goodies, shall we say. One of the most impressive tenant goodies that we found out that we owned was on one of the visits of our GC to finalize the scoping documents. They found bed bugs. And they didn't just find bed bugs in one of the units. They found bed bugs in 9 out of 10 of the units. And they said, guys, we can't do anything until this problem is solved. So now our project has come to another screeching halt. And so we had to partner up with a local exterminating company, and they brought out their dog, and the dog went in all the units and identified that there were bed bugs in all 9 out of 10 units. So Thomas and I had no experience with bed bugs yet. But since then, we've had lots of experience with bed bugs.
So you had the contractor was the one that originally found that.
Yep, he found it.
How did they find it? Did they just kind of see evidence of it?
They found live bugs. It was to the extent that not only was there evidence of bed bugs in all of the units, and you learn to look for this on the ceilings, sort of where the ceiling meets the wall. There'll be little brown quarter-sized spots of bed bug defecant, but they found live bugs in the apartments. And for live bed bugs to be out in the day during the day is there's got to be a lot of them, because usually they're hiding and sleeping during the day.
Man, so you got that phone call from the contractor, the new one that's getting ready to get started, kind of walking some of the units, and they're saying, hold on a minute, we can't do any of this stuff until these bed bugs are remediated. So you reached out to the local extermination company. They brought out some dogs to confirm that 9 out of the 10 units were infected. So what did you have to do to remediate that, to get rid of those bed bugs?
Right. So there had been evidence once we got into some of the apartments that the tenants had tried to self-treat. So they had some bed bug spray and some chemicals that they had tried to treat with, but the infestation was such that it was so great that chemicals were not going to harm these bugs. We really had to nuke them. And it turns out that the way that you can do this is you need to heat the internal temperature of the apartment to 150 degrees Fahrenheit for at least 5 hours. So we contracted with the exterminator, and they brought out their big equipment. It was 3 big F-250 Toyota Tundra style trucks towing big trailers with lots of equipment. The original price, by the way, was going to be $900 per unit. So it was a $9,000 bill to get rid of these bed bugs. We were able to negotiate that down to $6,000 because we had some volume. They gave us a volume discount, but still $6,000 that was not in the project budget and not in the pro forma. So they came out and they have gas heaters, or they have oil heaters, and they have to tape up, seal the units, and heat them up by blowing hot air into them for the better part of a day.
Wow. So how long after the GC found that were you guys able to get that exterminator company out there to kind of complete that project?
Right. It took a couple of days to get the dog out, and then it took another week or so to get on their schedule and get out and do the treatment. So they came out, they did the treatment. This is about 2 weeks after we initially found the bugs. We had to let a few days go by to make sure the bugs were dead. We went back in with the dog. Turns out there were still bed bugs. On a scale of 1 to 5, there were several apartments with a 5 infestation. So they come back and they had to retreat a number of the units. And eventually, after about 3 weeks, we were able to get bed bug free certificates on all of the units, and all of them were tested clean by the dogs.
Now, I know I'm kind of fast forwarding a little bit after renovations, but I'm sure we'll talk about this. But did you disclose to these people who are going to be renting it later on that they had these bed bugs, or because you had that certificate, you really didn't have to talk about that?
Yeah, because we had the certificate, we didn't have to talk about that. And we've had tenants in there for beyond 6 months, and we haven't had any complaints. But the units were crispy. I mean, they heated them a long time. The dog has been there in multiple times. They're done chemical treatment. So we're very confident we sleep well at night that there are no bed bugs in our buildings. No,
I think that's good. That's smart that you guys did that. So let's talk about, finally got rid of the big bed bugs. Now we're kind of into the renovations and they're getting in there and getting started. Were they able to start right after that 3-week period of getting them done?
Yeah,
Well,
they were. Thomas?
yeah, no, look, I think the bed bugs did slow us down. And again, in retrospect, as soon as you see bed bugs, you probably want to burn them early on, and we could have killed some of that literally in the month that we were down. But it put us back about 3 weeks, and then they started up. You know, they mobilized, they brought their teams in. They started with started with 5 units, and then they quickly started on the other 5. So once the process got going, it was fast. We were there probably every other day, stopping by with a construction hat and sometimes a checkbook, because even on a project like this, the good thing I would say is that when the final price came in, it was within 10%, 9% of what they had quoted us. Again, you got to allow for that 10%, 15% overage on any of these jobs. But some of those things, some of those overages were just oversights on both sides. On our side, because we rushed. Again, we're rushing to get a second person on there. Time is money. Every day, every unit's costing me $30 in rent that I'm not going to get. We had a 1-page scope sheet versus in the previous contract we probably had a 5 or 6 page, very detailed down to the fittings and the colors and all of that. But because you had a 1 sheet, there were some things that weren't specified. Words mean something in a contract, and if you don't put "and paint," then that means "and paint" is your cost, right? So it's things like that. But some things fell through the cracks. Tub hardware that doesn't seem like a big deal, but it can be $100. 100 times 10 is 1,000, and you're off to the races on those kinds of things. I think the one place we tried to, I don't know, be smart, or I don't know what the best way is to look at it. Don't be your own GC. Maybe that's the best way to put it, because we separated out the HVAC AC contractor who was doing $50,000 worth of business from the interior guy who was doing $280,000, $300,000 worth of business. And part of that was we thought, hey, we can negotiate directly and better with the HVAC contractor because of the size of the deal. And I think we got decent, we definitely got decent pricing after we negotiated down. But then the two had to work together. And now you ran into, I'd say, Josh, maybe 20% of our conversations and issues on the site were because somebody didn't want to talk to each other about doing something. A cable was going the wrong direction, or a pipe was going through a different area than people expected. So in hindsight, we probably would have had the GC bring the contractor as well and sort those problems out on your own time versus on mine. The good thing is we had the power panels for this kind of building, which is about 40, 50 years old. Those panels needed to be replaced. The distribution panels needed to be replaced. Duke Energy, Duke Power redid those panels at their cost. There's a program that's out there for the replacement of those types of panels, and they did those. So that was a big plus, because that could easily have gone to close to $2,000, $3,000 a unit. Now, on the other side, the code inspector came through, and as he was doing his permit looks, we found out that for an inspector, having more than half the wall open means that you've kind of opened up all the walls. If he thinks he can walk through it, then he's going to tell you you've opened up all the walls, and you got to. So he forces the wrong word. He strongly encouraged us, if we wanted our property to be licensed, to get some wired smoke detectors as opposed to the battery ones that we had planned to put in. And so, you can imagine that's electrician that's cutting up through some drywall, et cetera, to get your stuff. So things like that. But, it's not like we had a new roof to put on that we didn't know about, or new floors, or, a bunch of new piping. We had some new piping to do. But it was still, again, 10 to 15% without major changes. But then we were done.
So after they completed it, what was your all-in cost for your renovations finally?
I think our number comes out to $444. We had budgeted just north of $3 $350. So with the increase in the cost of the contractor, with the variation, with the cost overruns or variation, plus just more or less a few things in there, it came out to 444. So in the economics, you're still talking about being within the appraised value of the property, and so your returns are still held tight. But what it really told you is you had to have huge gaps in your, or huge buffer in your initial estimate in order to still come in with good economics.
What did you guys end up buying? I can't remember from the original podcast, but what did you guys end up buying per unit on this one?
I think it's 2650 or 26,500 a unit. So 265, you add in the 445 essentially, and you're at, what is that, 710 or so. And the building was appraised just above 700. So,
okay. And the rents, what were the rents before? And I know we're going to be kind of talking about the lease up period now as well, but what were you able to now market and achieve on the rents?
Josh.
Well, when we purchased the building, the rents were said to be 600, but if you remember from episode 1, the owner wasn't collecting very much of that 600. So his effective rents were something like 300 because he was only collecting about half of the monthly rent roll. And then our business case, I think, finally settled around being able to achieve rents about $850. And even with the cost overruns, we would have felt okay there. But we went out to market at $950, and we tested the market. That was a little bit high. So net, once we got the whole complex leased up, we're at an average rent of about $920.
That's great. So you're about almost $70 more per unit than you were on your original underwriting. So kind of helped to mitigate some of that additional cost on the renovations when the overruns.
Yes.
Yeah. No, that's good. So now we've renovated the units. We're now putting them on the market at $950, $900 to $950, somewhere around in there per unit. Kind of walk me through how the lease up period went.
Well, we can complete the project and we were ready for lease up beginning in June. Everything was done, punch lists were completed, ready to go. And we did some staging. So we staged the units, and the company that did that for us did a beautiful job. So we ended up with really great photography of the complex as well as the interior units. Property manager put it out through their portal, through their networks, publishing on all the relevant sites, and we waited and we waited. And it felt like we waited and waited and waited. All told, we didn't get the 10 units really leased up until the beginning of October. So June, July, August, September, and really 4 months to lease it up. And that was, realistically, I think we were hoping for being able to lease it in 45 days, but the market just couldn't absorb it, or we didn't have the right distribution on the property, or we weren't marketing it very well, or whatever. It took 4 months to lease up.
And did you run into any kind of issues during that 4-month period?
No, it was a pretty smooth lease up and transition. One thing that did surprise us was throughout the project, our property manager had not charged us any additional fees for coordination or sort of helping to oversee the project or whatever. And one day they did send us a note saying that they felt like they needed an additional $5,000 just to sort of cover the costs that they had already incurred in helping us with the project for the previous 8 or 9 months. And that came a little bit out of nowhere for us, so we were a little bit surprised with that. But, I mean, at the end of the day, they had put a lot of hours into it, and they probably had earned it. So we ended up paying a invoice to them for $5,000 for their work, in addition to the lease-up fees that we had. So that was unexpected, but, again, it comes out in the wash at the end of the day.
What did they do for that $5,000? Because I know obviously there wasn't anything to rent until June, but what were some of the things that they were doing since you acquired the property to help coordinate to kind of earn that $5,000?
Well, initially when we had to say goodbye to all of the previous owners' tenants, they filed all of the evictions. They tried to collect rent. They totaled up all the monies owed and sent that off to collections for us. They did all the coordination of the pre-GC work. So the removal of all the trash for the previous tenants, the coordination work to get the yard cleaned up. There was a lot of junk in the yard that need dog houses and things that need to be cleaned up and wires to be taken off the building. And then throughout the course of the project, we would ask them to go over there and check on things, because at some point I hit the road and Thomas was not in the area. So we were using him as our eyes and ears to check and make sure things were getting done as we were expecting them to.
Mm-hmm. I mean, I'd say that the 5,000 that we got hit with was probably not a bad number or a big number or anything like that, because they did do the work. It's just you wanted that up front and know that up front, and so other property managers will give you a quote for 10, 15, even 20% of the project price to do the oversight. That wasn't in this, and so it was a surprise, but I think they did good work in overseeing the project.
Mm-hmm. So what has been the feedback from residents so far about the units?
Well, I'll tell you, number one, we got a lot of, I'd say, quieter tenants than we thought. Maybe even some a little bit lower on the or even, let's just say, different from the demographic that we thought. Meaning we had kind of positioned this as a nouveau, it's not artsy, but it's kind of revitalizing the street and the area near Mount Holly. So we were expecting maybe some more folks coming out of Charlotte that might be professionals and looking to be a little bit outside of the city, but be maybe a little bit of an artsy area. And what we got was kind of, good working class folks who, they're not really looking for a ton of extra amenities or a ton of extra stuff. They want a nice, clean, safe place. And so I'd say it wasn't really whether they were above or below. It was just that they were different in terms of demographic and what they were looking for. And then we also had to end up with we had to let pets in. Now, the pet discussion is instantly, you have people on either side of the aisle on this one. So without offending either the Republicans or the Democrats on this one, the pets are a big factor when you're trying to move fast on leasing up a property. And half the people will essentially come with pets. And if you say no, then you're, by the math, it says you'll take twice as long. So we let the pets come in as people who had just put in $35,000 a unit. You didn't want pets to come in and tear up your vinyl plank or your carpet or leave hair and stuff around. But I think we did a pretty good job of dimensioning what kind of pet can be in there. And that was about it. I think that was the only difference. Otherwise, the tenants have been generally happy. This is a 50-year-old building. So regardless of how much, cool new stuff you put in, there's always some old stuff. And we've had a few things here and there that, there's a leak here and there that'll pop up, or, a rain gutter doesn't flow the right way or something, but small stuff. But they like the apartments.
Mm-hmm. So the residents are in there. You guys are finally happy because renovations are done and you don't have to worry about that piece anymore. And you've now leased them up. So you're actually now finally making a nice, decent income off of this property. So all in, obviously you put up 20%, but all in, from what your mortgage payment is and some of your interest stuff and things like that, where are you guys at right now?
But wait, Dan, there's more.
Oh, there's more.
There's more.
Let's talk about these.
So fast forward to September, end of September 2019, 9 of the 10 units are leased. We get a lease contract signed on the 10th unit. And the property manager goes in there at the end of September to do a quick check before the tenant moves in. And he notices some stuff on the floor. It's not really water, and it's not really, we don't know what it is. But it's orange, it's green, and it's coming up from in between the planks of the LVP. He says, hey guys, we got to take a look at this. What do you think this is? And we start looking at it, and I think, Thomas, you flew down to check it out because I was out of the area, so I couldn't go. You have the on-site experience, so you want to talk about it?
Yeah, so you walk into this middle unit out of 5 units, which by definition, something's got to be happening in the other units if it's a building problem.
Is this a slab or a crawl space?
This is a slab.
Okay.
Yeah. So adding mystery to mystery, it's a concrete slab that is just, I mean, it's impervious. It's hard as all heck. There's no cracks. There's no settling. It's just great. But you've got this gooey stuff coming up. And then, we walk in there, we're standing there with the contractor, the flooring guy, the property manager, and we're standing in the kitchen. And just as you stand there, you look down and you see little pools of gray stuff coming up between the cracks. So, I mean, it's not water. Some of it is glue-like. We started pulling up the plank and we see that it's very moist underneath these tiles, or underneath these planks. And nobody can figure out, is it water? Is it concrete ooze? What is it? We went down a path on this one. I mean, I'm an engineer by background. I didn't recognize what the heck was going on. We had flooring people who had no idea what was going on. We brought a foundation guy in who didn't understand what was going on because he couldn't see any water coming in from the outside. We had a structural engineer come in finally, core the concrete in a couple places, go down into the soil to see if maybe there was, I don't know, we had a swimming pool underneath the concrete slab. There was nothing under there. It was just normal organic and organic material in soil. Long story short is, I don't think the mystery was solved, other than when you had carpeting on top of concrete, any moisture that was coming up through the concrete as a normal sort of wicking process was probably getting evaporated away. And when you put LVP on top of it, it's synthetic, it's supposed to be blocking. We didn't put a moisture seal down, which may have been an issue in its own right. But there's something about the interaction between the glue, the moisture coming up through the concrete, and just, the structure that meant that this glue was not going to stick and those planks weren't going to stick. How many weeks down the road? Maybe 5 or no, maybe, I think it's 2 months on that unit. We finally said, enough is enough. Remember, every day is $30 for us. Let's just replace. And by the way, in the middle of all this, we were talking to the contractor and saying, I have a 1-year warranty on floor and your work. Look at the floor. That work doesn't cut it. And his pushback was, I put in a good floor. This is your problem. It's your building. It's your concrete. You can only argue about that so much before you just come down to, all right, every day is costing us all money, including engineering fees. Let's just go ahead and make a deal. And to the contractor's favor or credit, he said, look, I'll cover 2 units for you, and then we'll get you an at-cost price for any additional ones you want to fix if you need to fix them. And we went to work. And I think the work on fixing that final or that middle unit was done a couple of weeks ago. And so that's ready to go. And then we'll change the other ones out as tenants are ready, because you got to get them out of the unit for 3 days to change a floor. And so as they're ready, we'll replace another 2. So again, that was a mystery. If anybody knows how glue and LVP and concrete can produce water, let us know, because there's people in the desert who could probably use that formula, get as much water as they wanted.
That's a good question, because I'd be curious to know if anybody else has experienced that before, where obviously we put, LVP on, like the wood floors and things like that, but to put it on concrete floors that are like that, I have never heard that either.
We checked this building high and low. We had plumbers come in, rechecked that there were no leaks in the walls. We had a plumber come in with specialty equipment and listen to the slab to make sure there were no leaks in the slab. We had the engineer come core sample. She tested the soil underneath for fecal coliform, for fluoride, for everything, right? Because if it was fluoride, then it would be a freshwater leak. If it's fecal coliform, maybe you've got a sewer leak. Nothing showed up. And she did a crush test on the core that she took. And she said, look, this thing crushes it. What was it, 7,000 PSI? It was dry as a bone when we crushed it. There's nothing in there. I don't think that there's any water coming up through your slab. I have no reason to suspect that. We have a report from her, and then the flooring company sends their own guy out, and he comes up with a different conclusion. So it's just all he said, she said, and it's still a mystery. We have no idea what's going on there.
So is it actually happening on all the units, or just that one middle unit right now?
It actually was on 3 that we could tell. So the middle unit and a couple of units to the left of it. And then there were some small sightings in a couple of the other units in the same block, and one in the other. So it's a mystery because it was almost like that middle unit was taking the brunt. But you did see it in a couple of the other ones. So, we'll replace those floors. But for the others, maybe it's kind of just initial few months of wearing in. But still, it took long, in hindsight, because we're all about lessons learned. This was our lab. I think we said that the first time. This was the Thomas and Josh, put on your white coat and prepare to have a few things blow up in your face. And it has not, it's not failed to deliver on its intended objective. But the point was, if we had looked at this and you couldn't figure something out, within say 2 or 3 weeks with a bunch of professionals in there, you got to just replace. And that may have given us $1,000 back on the deal. But again, nobody knew, and we brought professionals in, and we had we spent money, and this was not an easy one to figure out.
I like how you called it sightings. Like if it was Bigfoot or something, because it's such a mystery, And obviously, when you say your lab, it kind of turned into that, right? With this kind of chemical or something, oozing out from the bottom of the floors.
I was hoping that it would be an alchemist lab and we could get some gold coming up through there, but I don't think we've reached that point yet. We haven't started the drilling yet. We'll see.
Yeah. So let's talk about the economics, Josh.
Yeah. So we've the 10th unit should be rented here pretty soon. We'll have a rent roll of $9,100 plus minus a month. And now that we're done spending money on our mysteries, we look forward to a stabilized property in the future. So we're still happy with it. Like, I think this project for a group that maybe is committed to multifamily as we are, or didn't have the time to give it that we did, it might have broken them and soured their view on real estate. And, I can very easily see myself or somebody else walking away from this project in an alternate universe saying, oh man, that was just, I don't want to do that again. But I think the way Thomas and I look at it is, these are things that, these are lessons that we're going to carry forward with us. And we're a whole lot more knowledgeable now than we were 6 months or 1 year ago. And we're ready to go for the next project.
Well, and I think you would also, when you look at something like this, you have to realize that you guys are buy and hold forever type people, right? You're not just going to buy this and you're looking to exit it in, 3 to 5 or 7 years. You're looking for this thing to be a long-term investment. And I think you guys have put the work into this project up front so that it will live up to that long-term hold and be able to cash flow it for many years.
Yep. That's the idea.
Any final thoughts about this project or anything moving forward?
Well, maybe I'll again, just, I think the project itself was very interesting. The economics have come through as we expected. So we talked about the top line being where it is. The expense ratio has come in right where you'd expect a multifamily to be, right at the, high 40s. And then from a cash flow and financing standpoint, we got a good loan that where we are able to throw some cash off on the property every month, barring again anything strange, which I hope nothing else comes through. But it's on track, and this is pretty much 12. We're almost on 12, 13 months after we first started that we're now stabilized and going forward. So to Josh's point, going through that was necessary if you're going to be in the game for a while and not get scared at small things. I tell you now, when we look at properties, I mean, one of the 52 unit that we bought, when you look at properties and you see water issues, or you see even, some bed bug issues, or you see it's not a big deal, right? You've gone through the pain of, scary renovation and some problems, and it's not that big of a deal. So, I think you got to chalk one up at least to learning, and then, but it still has to make sense. So I think our initial go in and our initial ask from the seller on this property was in the high 300s, and to get them down to 260, it was 265, was important to take that risk that we were going to take on a renovation.
Well, I want to thank each one of you, Josh and Thomas, for being here again for the second time and sharing with us some of the woes that you had and obviously some of the success with now being able to lease it up and having just one more unit now that's ready to be leased up. And how can the listeners reach out to you if they have some further questions for you about this project or maybe want to talk to you about a future project?
Well, we're just consolidated into our Humboldt Partners branding and our Humboldt Partners domain. So you can find us at humboldtpartners.net, or you can email me at jstack@humboldtpartners.net.
Awesome. Great. Do you all have, well, go ahead and share yours there, Thomas, too.
Yeah, and then Thomas K at humboldtpartners.net. And I will wrap also with saying that going through a project like this with a partner who is on, has the same interests as you have and the same vested time is very important, because you can bang things back and forth with each other that, if you're by yourself, it might be a lot more scary. So thanks, Josh, for being my partner on the Mystery Water project.
Yep.
Great. Well, great. Well, thank you guys again for being on. Looking forward to continuing to follow you as you close more deals, and hope you have a great 2020.
Thanks.
Thanks.
Think big, act daily.
Absolutely.